Crash course on accounting. Financial statements and balance sheets. Learn about financial statements and balance sheets, and how to interpret them. Introduction to accounting. Accounting is the language of business. It is the process of recording, classifying, summarizing, analyzing, and interpreting financial information to make informed business decisions. Accounting provides a way for companies to keep track of their financial transactions, create financial statements, and communicate their financial performance to stakeholders. In this crash course, we will be focusing on two important financial statements: the income statement and the balance sheet. The income statement. The income statement, also known as the profit and loss statement or statement of operations, is a financial statement that shows a company's revenue, expenses, and net income or loss over a specific period of time. It gives investors and stakeholders an idea of a company's profitability and helps them evaluate its financial performance. Revenue is the total amount of money a company earns from its sales or services. Expenses are the costs incurred to generate that revenue. Net income or loss is the difference between revenue and expenses. For example, let's say a company sells widgets and has $100,000 in revenue for the year. It incurred $60,000 in expenses, including materials, labor, and overhead. Its net income would be $40,000, $100,000 to $60,000. The balance sheet. The balance sheet is a financial statement that shows a company's assets, liabilities, and equity at a specific point in time. It provides investors and stakeholders with a snapshot of a company's financial position and helps them evaluate its liquidity and solvency. Assets are the resources a company owns, such as cash, accounts receivable, inventory, property, and equipment. Liabilities are the debts a company owes, such as accounts payable, loans, and taxes. Equity is the residual interest in the assets of the company after deducting liabilities. For example, let's say a company has $500,000 in assets, including $100,000 in cash, $200,000 in inventory, and $200,000 in property and equipment. It owes $200,000 in liabilities, including $100,000 in accounts payable and $100,000 in loans. Its equity would be $300,000, $500,000 to $200,000. Top 12 popular accounting terms on financial statements and balance sheets. 1. Revenue. The total amount of money earned by a company from sales or services. 2. Expenses. The costs incurred by a company to generate revenue. 3. Net income or loss. The difference between revenue and expenses. 4. Assets. The resources a company owns, such as cash, inventory, and property. 5. Liabilities. The debts a company owes, such as loans and accounts payable. 6. Equity. The residual interest in the assets of a company after deducting liabilities. 7. Accounts receivable. The money owed to a company by its customers for goods or services. 8. Accounts payable. The money a company owes to its vendors or suppliers. 9. Inventory. The goods a company has on hand to sell to customers. 10. Depreciation. The gradual decrease in value of an asset over time. 11. Amortization. The gradual decrease in value of an intangible asset over time. 12. Accruals. Revenue earned or expenses incurred but not yet recorded in the financial statements. Interesting examples and stories. To help illustrate the importance of financial statements and balance sheets, let's take a look at a few interesting examples and stories. Example 1. Enron. Enron was once the 7th largest company in the United States. However, in 2001, it was discovered that the company had been hiding massive losses and debt through creative accounting practices. Enron's financial statements were misleading, and the company eventually filed for bankruptcy, causing thousands of employees and investors to lose their savings and investments. This example highlights the importance of accurate financial reporting and the consequences of misleading financial statements. Example 2. Apple. Apple is one of the most valuable companies in the world, with a market capitalization of over $2 trillion. Its financial statements show a strong balance sheet, with a large amount of cash and investments and minimal debt. This example demonstrates the importance of a strong balance sheet in maintaining investor confidence and securing funding for future growth. Example 3. Tesla. Tesla is a company that has seen a lot of volatility in its financial statements. It has struggled to generate consistent profits, but its stock price has still skyrocketed in recent years. This example shows that financial statements are just one factor in determining a company's value and that investor sentiment can play a significant role in the market. Summarizing financial statements and balance sheets. In summary, financial statements and balance sheets are essential tools for evaluating a company's financial performance and position. The income statement shows a company's revenue, expenses, and net income or loss over a specific period of time, while the balance sheet provides a snapshot of a company's assets, liabilities, and equity at a specific point in time. Investors and stakeholders can use these statements to make informed decisions about a company's potential for growth and profitability. However, it is important to note that financial statements are just one piece of the puzzle and that market sentiment and other factors can also influence a company's value. Here is a poem. In the world of business, it's all about the green. Counting the cash, and profits to be seen. But numbers alone won't show the way. Financial statements lead us to the light of day. The income statement tells us what we've made. Revenue and expenses in a single trade. Did we earn a profit, or take a loss? This statement helps us to tally the cost. The balance sheet shows our assets and debts. The money we owe and what we've kept. Equity's the difference between the two. A snapshot of our financial value. Accounts receivable and payable, inventory and more. These terms and concepts we cannot ignore. Depreciation and amortization, accruals too. All part of the language of accounting we must pursue. So, let's heed the lesson of Enron's fall. And remember the importance of it all. Financial statements guide us on our way, helping us make informed decisions every day. Start planning your next global adventure with ease and convenience with our Booking.com referral link. https://www.booking.com/index.html?8 equals 7989335 as a great choice to plan your next trip. You can find and book flights, hotels, cars, and local attractions all in one place, and their price match guarantee ensures you're getting the best deal. Thank you for kind support our AnHub Metaverse channel, and please watch more interesting videos here.